guys, it's been a long time. Just been really long. But anyways, I don't even know what to say, but it's video time, guys. I'ma be starting straight from the basics. Just like an intro. Got the quick little Discord, Got the quick little Discord over here. But anyways, into the actual price action. So guys, as you know, the market, every single candlestick you see, right, every single candlestick and like movement, it's buyers and sellers auctioning for price. So this is what market structure is, right? Market structure is the way price moves through highs and lows. If price is making higher highs and higher lows, that means the market is bullish. Bullish means kind of like buys. So bullish is up and bearish is down. You can remember it by like bull and bear, but it's whatever. If the market's making lower lows and lower highs, that means the market is bearish. Alright, and this is kind of how you spot it on the chart. Alright, so you see like we're kind of in like an uptrend here right now, as like a pretty obvious thing. So this is called a higher high. This is the highest point of price inside of this move. Okay, this is higher low. So this is a low, right? But this is a higher low because it's higher than this. So it's not the lower low, right? It's a higher low that's higher than the lower low. So you can see price comes back up, takes out this high to create a new higher high, and then retraces and sets this higher low, and so on and so forth. It's kind of the same, but kind of like reverse engineered for bearish markets. So you have this lower high. Well, actually, this is considered a higher high. I don't know why I marked it like that, but it's like whatever. So just take that out. Right? We have a lower low, lower high. This is a lower high because look, it's obviously lower than this high, right? Lower low. This is lower than this, therefore it's the new lower low. Same with the lower high, right? It's lower than the high, so it's now the newer. So now it's the newest, lowest high, right? And so on and so forth. This video is definitely not gonna be long, but I mean, I can show you how to spot it on the chart. There's some secret sauce. You gotta keep that on the down low. But it's pretty obvious here that we're like in like a uptrend, you know what I'm saying? So here we have what, like higher low, right? Come here, we have our higher high. Oh, I'm not gonna be marking all this out. You just gotta be like pay attention to what I'm saying. Have this lower higher low, right? Higher high, higher low, higher high, higher low again, and higher high. So yeah, that's just the basics. And for bearish, I mean, I guess it's kind of self-explanatory, but I'll go over it for the sake of simplicity. Higher high, lower high is lower low, okay, and lower low. This isn't a lower high because it's higher than the previous lower high, right? So yeah, that is kind of it for market structure. There's not that much to say about it. This is the basics, I mean, it is what it is. But this is I wouldn't say this is sauce, but break a structure. Alright, so this is a break a structure. A break of structure is when price is already moving in one direction and closes through the key structure level. So like a higher low, higher high, lower low, lower high, and all that. And when it closes, it keeps the trend alive. So if it just wicks through, nah, hell no, it does not count. If it closes, yes, it counts, because then when it closes, it shows acceptance. right? And when price gets accepted, the trend is strong, the trend is healthy. And yeah, in a bullish market, price is making higher highs and higher lows. If price pulls back, forms a higher low, and then closes above the previous higher high, that confirms a bullish break of structure. A bullish break of structure, it just tells you that buyers are in control of the market and the move is in clear continuation of bullish trend. In a bearish market, price is making lower highs and lower lows. If price retraces, forms a lower high, and then closes below the previous lower low, that confirms bearish break of structure. It tells you that sellers are in control and the move is in continuation for a bearish market structure. Alright? Break of structure is extremely useful because it helps you understand whether price is continuing the trend or losing it. We use it to confirm momentum, avoid guessing, and wait for the market to show its hand before entering. Now I'll be quite frank. I have not touched break of structure in a hot minute. Just mainly because my entries are a little more sophisticated than that now. But yeah, alright. Yes, okay. I have a prime example of a bullish break of structure, right? Why is this a break of structure? This is a break of structure because look, we're in a clear uptrend basically, right? We still have this lower low, you know? We still have this lower low, also liquidity. I'll touch on that in another video. But for now, just think about it as a higher low, okay? If we have this higher low and we're starting to go a little bit lower, right? We're just tanking, okay? We've taken out all of these lows, right? All of these. Then like you must be thinking, oh shoot, we have to sell, blah 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 blah. No, we're still in an uptrend. The reason why I'm saying that, actually wait, shit, scratch that, I marked that shit out wrong. It's a lower low. But the reason as to why we're still in an uptrend is because if you look in the day, right, we have Asia low down here, right? It's an unprotected low, so it does make sense that price would want to come back to it. But also, this is a break of structure because, look, man, price. Ah, shit, bro. This video is gonna be so ass because I haven't used any of these in a long time. I'll just give you a proper example, alright? This is one that would go lower, but it just didn't, alright? Because look, we have here a higher high. No, it's a lower high. It's a lower high because this high is clearly higher. Lower high, subsequent lower high, right? And then we have our lower low all the way down here. Okay, so price is clearly bearish in this sense. Alright, so a break of structure is like we just want to see price continue lower, right? We want to see price flush down. This is a break of structure. The reason why this is a break of structure is because look, I mean, this is a bearish candle. If anything were to be a bearish break of structure, it'd probably be this. So yeah, we get the body close and we do continue lower for a bit, but it just stops us out. I don't use break of structure that often, but you can, of course. I just freaking hate it. You use break of structures to confirm the trend. Like if you were strictly using like price that like cut off like here maybe, then like you get a bullish break of structure like thousand times over. Because what do you have here? Like just this is just assuming, right, that this shit doesn't exist. So you have a higher low, higher high, higher high, and higher low. Yeah. So if we want to confirm this trend, right, what do you want to see? We want to see a close past our highest high. Yeah, past our highest high. Therefore, if we close past this, which we do get, right? We do get a close past, then our trend is considered healthy. Now I'll be so dead ass. I don't think I can find a bearish example because I'm a freaking idiot. But I think that is all you guys need, cause man, it just gets to the point. Okay, I'll try and find a bearish one, like, cause bro, recently we've just been at all-time high conditions, and there's just jack shit in terms of breaker structures to continue lower. Okay, you know what? Fuck all this. All right. So we have this pretty big downtrend right here, of course, right? We have our higher high, lower high, lower high again, right? Lowest low, higher, no, lower high, yeah. So for a breaker structure, we want to close past our lowest low, right? Which we do get. We close past it and we get an aggressive sell-off. Now I'll be dead ass. From my personal experience, please don't use breaker structure by itself. Pair it with PD arrays. I'll cover PD arrays in the next video. But please do not use that shit. This is my Discord, by the way, if you would like to join. You know, I have like other stuff like standard deviation, the crazies, all that. I haven't updated these because I'm a little lazy. But overall, this Discord is like pretty nice. This is like some secret education stuff. I even have a beginner's PDF. It's pretty old though. It's from April. We do have daily recaps. You know, it's genuinely just me and my friend. This is a scalp, but it was like a biased scalp. Like, I know it doesn't look a lot, but this is 50 points, bro. This is 50 points of movement. Honestly, I think I'm deviating a little bit. Soon I'll teach you guys how to take trades like this. 16 risk reward. That was on paper because I'm like low-key ass. But, you know, it is what it is. And if you guys want to join, here's the link. I'll probably paste it in the video. But, yeah, please do join, sub, like, all of that. And golly, this shit's gone for like 12 minutes. I don't even know if the mic audio is good or not. I think it might be really shit, but hopefully not. Alright, long time. It's been like what, like fucking a month since I last posted, or like a little longer than that. But you know, you gotta post, blah blah blah. See y'all next vid. Bye.